Hey, good morning. Let's go over today's trade plan. So in the overnight session, we were using the 86.5 to 88.5 as the bull bear zone, and the idea was that if ES holds below it, then sellers would remain in control, and we could see a move down to the lower levels. And in the overnight session so far, we saw a failure at that 86.5 to 88.5, and a test of the 76 to 78 support, where buyers have been active. So off the open, we're going to keep a close eye on this 76.5 to 78.5 pre-market support. We know that from the overnight session, sellers have been more dominant, and heading into the open, the sell side is more in control, and 76.5 to 78.5 is a short-term inflection point. So if buyers are going to step in, then this is a spot where they could step in. So we're going to keep a close eye on that to see if it continues to attract buyers. If it does, then we can get a rotation out of here and head up for a test of 82.25 to 83.25. That's the breakdown spot from the overnight session, and it's still a spot where sellers could be active on the way back up. And above that, we have the primary resistance on the day at 86.25 to 88.25. Now, if this short-term bearish theme continues and sellers are still pretty dominant, pretty aggressive, then we could get a break below 76.5 for a test of the recent balance lows at 70.25 to 72.25 and potentially 1968. TF is really the driver or the market that's leading on the downside, and TF is now getting closer to some better support spots as well. So as I mentioned in yesterday's recap video, TF has some support at 11.14, and then below that around the 11.10 half to 11.12 half area. And as TF heads into that support, if it does break lower from here, and ES is also testing support, then that could be a spot where buyers could step in both markets, and we can see a short-term reversal back up from perhaps 70.25, 72.25 back up into 76.5 to 78.5, and potentially back up to 82.25 to 83.25. So, heading into the open, we know that, the market's at this short-term inflection point. The short-term bias is still bearish, but with the idea that, at this point, buyers could step in here. The markets are short-term oversold, so either pre-market support or initial support are spots where buyers could enter. So we just have to read the market in real time off the open and just gauge the strength or weakness and see whether it makes sense to attempt a long off the 76.5 to 78.5 zone. We do have to be cautious on the long side because this is basically the area where the market has been balancing in the overnight session, and if it continues to balance below 82.25 to 83.25, then that can lead eventually to a break lower. So we just have to be nimble and cautious on the long side at these areas, and as long as we have good trade location and we're not going counter to the immediate momentum, it'll be okay. But we just have to keep in mind that the area has been tested multiple times in the overnight session, so we do want to be cautious, because off the open, if that selling just continues kind of like it did yesterday, then we could quite easily be looking at a move down to the balance lows, 70.25, 72.25, 1968, and even at those spots, ideally we want to time the trades as TF is also slamming into some support, and that way it just increases the odds of at least a tradable bounce, if not a reversal back up towards 82, 83, and potentially 86 to 88. Now on the upside, if we can break above 82.25 to 83.25, then the next target would be the gap fill and test of the previous VPOC, 86.25, 86 half. That's where we have our initial resistance zone. That's a key inflection point. But if we're going up on pretty decent momentum, then initial resistance is going to be a better spot to take profit if you're able to catch the long side. And as far as shorting that zone goes, that's something that we'll have to read in real time. If the market is really bearish and the other markets are still quite depressed, then initial resistance could still attract some selling. Otherwise, 91 to 93 could prove to be a better spot if there's a lot of upside momentum. So again, that's something that we'll need to gauge in real time. Just read the momentum situation, see what kind of tick readings we're seeing on the upside, look at the price action, the range of the bars to see kind of just how strong or weak this market is, and if it's kind of just trudgy price action to the upside and the momentum's not quite there, then initial resistance can still be a spot to short. But if the momentum is pretty decent and we're getting some better buying from an oversold condition, then 91 to 93 would be a safer spot to look for a short and then target a move back down into the 86 quarter to 88 quarter and potentially lower. So overall, there isn't any major econ report that can really drive this market big, one way or the other. But we know that the short term, with sellers in control, we could head down to the bounce lows. TF has already broken below its recent lows, so even though ES has been the stronger market, it can still go down and test the recent lows and then find some buyers. So off the open, let's keep an eye on 76.5 to 78.5, 82 quarter, 83 quarter. Let's see which side continues to be dominant. If it's the sell side, then we'll just hold back on the longs, perhaps position ourselves short for a move lower. But if we start seeing some decent buying coming into the market, or 76.5 to 78.5 holding and being resilient, then we are short-term oversold, and that can result in a nice pop back into 82 quarter, 83 quarter, and 86 quarter to 88 quarter. So those are our main thoughts heading into the open. Let's see if the buyers do step in here, and we'll take it from there.